This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices sharply higher this morning. And it looks like financial markets have been greatly affected by news coming out of China. That news is that lending in China increased more than most analysts had anticipated. So we are seeing M2 money supply growth in China, the dominant influence in financial markets today, with stock index futures showing good gains. Even the retail sales number that came in weaker than anticipated, not really having much of a negative impact on stock index futures. Retail sales were down 0.6% when an increase had been expected. Longer term, we feel that the main trend is higher for stock index futures as global interest rates remain at historically low levels. In fact, we had two more central banks in the overnight trade easing credit conditions. Over in the currencies, the dollar index making a new 12-year high in the early overnight trade, but then very quickly falling on the Chinese lending news. By the same token, the euro currency fell to a 12-year low before it reversed, advancing almost 150 points from its low for the same reason. In fact, all of the other major currencies generally trading higher against the US dollar today. Some additional gains coming into the Australian dollar, which I think was more affected by the Chinese lending news, with Australia being a rather large trading partner with China. Longer term, though, still thinking that the dollar index will remain firm, especially with the Fed on track to raise interest rates. At least that's the consensus view. Right now, there's about a 78% chance that the Fed will raise rates at the October meeting. Now, that's the consensus view based on the financial futures markets. Our belief is that the Fed will not be in a position to raise rates that soon. Over in the interest rate markets, good gains with strength due to the retail sales coming in quite a bit weaker than expected. And the retail sales, a bit of a shock coming in lower since there had been so much talk that lower energy prices, translating into lower gasoline prices, would have improved the retail sales number, which in fact it did. So that coming as a very big surprise. Also, we have the Fed meeting coming up on the 17th and 18th. Traders will be closely watching to see if the statement contains the phrase patient, meaning that if the Fed will remain patient on when they will be raising interest rates. The feeling is that at some point that term will disappear from the statement. Longer term, though, we think that the credit futures markets will probably work higher, I would think, after the Fed meeting is out of the way. With the interest rate environment at such extreme lows globally, we feel that it is very unlikely that the Fed can raise rates earlier rather than later. So once again, the feature next week is going to be the Fed meeting, and there is going to be a lot of talk about whether the Fed will change the terminology. Longer term, we still believe that the bull market in credit markets, especially at the long end, remains intact. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.